Hello everyone, this is John Kogan. I'm the CEO of Proformative, the online community for corporate finance, accounting, treasury, and related professionals. I would like to welcome everyone to today's webinar entitled Financial Consolidations and Reporting, the Alignment of People, Process, and Technology. Improving the efficiency and effectiveness of financial consolidations and reporting can make a huge impact on the value and perception the finance and accounting departments present across the enterprise. This efficiency is driven by the proper alignment between people, process, and technology. Today's webinar will focus on best practices in aligning internal resources, building processes that facilitate cooperation with internal and external stakeholders, and current and emerging trends in technology available to ease the enormous challenges posed in effectively and accurately consolidating and reporting company financial results across business units and borders, as well as budgeting and forecasting for those entities. Now, we have a few items before we get started today. Number one, I would like to welcome Profix for helping us make this event possible through their support and provision of speakers. We have a wonderful subject matter expert today and an assistant controller, both of whom I will be introducing shortly. But they're both folks who are steeped in today's content, and we are looking forward to great presentations from both and an opportunity to ask them questions at the end of today's webinar. So great thanks to our sponsor, Profix. Next up, a quick note about Proformative. We'd like to welcome everyone to this event. If this is your first Proformative event, just a quick moment about what we do here. Proformative is the largest and fastest growing online resource for senior corporate finance, treasury, accounting, and related professionals. We're essentially a resource for folks to share knowledge. We have a uniquely valuable online peer network. We have subject matter experts galore on this online network. We have something we call our B2B marketplace, which is kind of like Yelp or Amazon.com, except instead of shopping for restaurants, you're looking for corporate fin products and services and seeing what your peers say about product and service providers. It's a really handy tool. And all of it is what we call noise-free. There's no ads on the site, and no one is allowed to sell or promote anything. So it's just peers talking to peers. It's a wonderful thing. Please check it out at proformative.com. Next up, a few quick notes, a little housekeeping for today's event. A link to today's presentation and a link to the recording of this webinar will be sent out to all attendees within 24 hours. However, the presentation itself is already available, uploaded to proformative.com/resources. So if you'd like to print it out, take notes as we go, or share it with colleagues, feel free to do that at any time. We are offering CPE credits for today's webinar. In order to get CPE credits, hopefully you have registered for CPE credits, and you will attend today, take the 4 polling questions that we're presenting today. You must answer all 4. They will be spread throughout, including one at the very, very back end of today's webinar. If you have any questions at all about CPE credits, please contact Chris Brower, who is a wonderful help for us in the events organization, and you can see her email right there. Next up, please ask questions. We have a ton of content today, but we're going to do our best to get through it all and get to the point where we can address your questions. So I encourage you to ask questions at any point in time. If you take a quick glance at your GoToWebinar control panel, you will see a box there entitled Questions. Just expand that box, ask the questions. They'll be put into a queue, and we'll do our best to get to them. If we do not get to them, we will ask today's speakers to reach out to you after the event and get you your answer. And we'll probably also end up posting the questions anonymously online, so that the answers can be shared with all of Proformative's user base. So feel free to ask away. Finally, at the tail end of today's webinar, you will be asked to take a short survey. It's 1 minute or less. We would greatly appreciate your feedback. We love to do it as well as we can every time, and your feedback helps us make these events as good as we can possibly make them. So thanks for staying till the end and giving us that final minute. Lastly, we have a number of learning objectives for today, so we'll go through these very quickly. Number 1, we hope that through today's event you better understand how to build collaboration and efficiency into your company's financial close and consolidation processes. Number two, we hope to help you identify opportunities to improve the alignment of people, process, and technology in the consolidation and reporting process. And finally, hope to help you better understand how to successfully expand your accounting and financial reporting to cover your growing business effectively. So that's a tall order for today, and to help us with this, I'd like to introduce the first of our two speakers. It's my pleasure to introduce Jeffrey Ng. Jeffrey is the Vice President of Product Planning at Profix. As Vice President of Product Planning, Jeff is responsible for managing the long-term product and technology strategy for Profix products. Jeff began his tenure at Profix as a management consultant, implementing financial analytics systems at over 70 organizations through North America, including Mazda, Bridgestone, Firestone, and many others. He most recently served as Profix's Vice President of Professional Services, where he was deeply involved in the development and implementation of best practices for the company and for clients. So Jeff, welcome. Thanks so much for joining us today.
Thank you, John. It's a pleasure to be here working with Proformative and speaking to this great community of passionate individuals in the space of finance, budgeting, planning, consolidations. So what we're going to talk about today are financial consolidations, performance management, the changing business landscape, some of the current challenges with financial consolidations, and also what some of the lessons learned that you'll hear also when Ben speaks. Our next speaker, Ben, speaks. Budgeting, planning, and forecasting still remain the primary areas of interest at companies looking at performance management. The challenge remains that too many organizations often focus CPM activity around the replacement of budgeting systems when there are often other opportunities for improvement as well. Financial consolidation is a specialized process usually managed by a small team of accountants at the corporate head office. This process, however, is a fundamental part of CPM. It creates the audited enterprise level view of financial information that must be shared with other CPM applications to analyze variance from targets. Today's financial organizations also face multiple priorities that include, the oversight of financial transactions, management of performance, financial reporting, and timely close and consolidation of financial data. So there's a competing demand for improved financial governance, increased transparency, and reliability of data. Regulations have also introduced a host of new standards and accounting rules, such as international financial reporting standards for global companies, changing materiality thresholds, requiring detailed schedules, and new disclosure for public filings. To complicate matters, finance departments are being asked to do more with less, as headcounts are reduced in response to economic pressures. As a result, CFOs are seeking ways to increase the efficiency of their financial close processes. Financial consolidation can be viewed as a long process that involves multiple steps, data capture, adjustments, complex calculations, as you can see in this diagram. Involve things like adjustments, currency conversions, intercompany eliminations, calculating minority interest, making more adjustments, and reviewing the results as a result of that. So it can be a very iterative process involving multiple people. However, multiple risk points may present itself at each step due to the lack of documentation and repeatable procedures. Traditionally, many companies relied on manual spreadsheet-based systems or older generation standalone financial consolidation applications for their consolidation processes. The traditional approaches placed heavy reliance on often spreadsheets or flat files transfers, but this is inadequate to meet the current challenges. And as a result, it often takes many days or even weeks to close the books at many companies, and would often contain errors due to manual data entry or undocumented adjustments. Consolidation was also heavily centralized at larger companies using specialized products at headquarters, but these products were often architecture or technology heavy, making them difficult to change and be nimble when changes do occur. Some people also use the consolidation capabilities of the general ledger. However, in those cases, the results were often that there was low participation and visibility from business units to the consolidation groups. you often created rifts between statutory financial data and management information because there's no ability to analyze the corporate data by different perspectives, such as by business units, products, regions, or other aspects important to line up business managers. And I think the one thing that I've seen often is that there's little to no documentation to some of these consolidation processes because they've been developed and they've grown through many, many years. Often information resides with one or two experts in the company, which creates huge risks if those experts left the company or even just retired. And that takes us to our first polling question.
Thank you very much. So this is the first of 4 polling questions that we're jumping into here. I'm going to launch it right now. And it should be appearing on your screen any moment now. The question here is, how much time do you spend on month-end closing activities? And you'll see there are a variety of lengths there, from less than 3 days, to, which is congratulations to you and your team, up to more than 15 days. So. Please take a moment to answer these, and then we'll jump right back in. I'll let this serve as a quick reminder that you can ask questions at any time using the question zone of your GoToWebinar control panel. I'll go ahead and leave this out for another 5 seconds, and then we'll get back into it. Okay, and that's that. Jeff, I'll forward it to your next slide, and then we'll let you take it from here.
Thanks, John. Another significant challenge is complex data management. Many of you may have even seen diagrams like this to try to explain the different data flows between your source general ledgers. We have multiple general ledgers from different vendors, and you have to bring the data into your subsidiaries, and the subsidiaries have no commonality in account structures. They have different financial calendars. You often get uncoordinated submissions, unresolved eliminations, and a lot of manual and validation. As you can see, if you use spreadsheets, that was often the medium that you would use to move that data between the source systems, subsidiaries, and to your different levels of consolidation. But the result of that is when you don't have a common chart account, you have inconsistent mappings, and inconsistent inconsistencies in your financial statements that often question the accuracy of them. You may have unresolved intercompany eliminations because things were done manually. Another thing is with things like currency conversion, if you don't use a common set of rates, trying to understand how the data got converted into your various reporting currencies can often be a daunting task. In working with global companies who have implemented defined consolidation systems and processes, what I've learned is that consolidation must take on a broader global view. And consolidation is a process that shouldn't be done in isolation. So you want to be able to look at both on a global basis, but also then be able to maybe dig deeper to view what the results are at some of the local areas so that there's value to all who participate in the process, not just for the consolidated entity, but the people participating will also get value being able to report their information in the local and also see the results in the consolidated global picture as well. And the other thing is business requirements need to be understood across the entire organization, and this is very important. It requires active participation from multiple stakeholders. So really consolidation is a team sport. You really require both the understanding of the local and regional groups and also your global consolidated groups as well. And the other thing that I may add is standardization and consistency is pivotal. So developing that unified chart of accounts so that you have one standard that becomes the blueprint for consolidations is very, very important. Some technology considerations. Technology can be a significant enabler, and it's important to determine the flexibility of your existing solutions. Spreadsheets alone often don't provide enough governance, or they don't provide enough ability for you to collaborate. But the other thing is looking at multi-purpose reporting requirements. is important when you are considering some of the technology. Can you report in both the local and also your global consolidated views? Does it support the multiple standards such as US GAAP and international financial reporting standards, and without having to do a lot of manual work with that information? The ability to capture additional disclosures and commentaries also becomes important as this information ultimately gets audited by your auditors. Being able to include the notes that explain how you made particular decisions with regards to adjustments, eliminations, can be very important to the auditors or to individuals who are reviewing the outputs of the consolidated information. So that leads to what I call looking for a unified solution. Unified solution is a solution that will give you that flexibility of having multiple reporting objectives, being able to incorporate disclosures and commentaries, and also being able to incorporate the collaborative capabilities that's necessary for a successful consolidation experience. So what are some of the elements of a unified solution? Well, unified solutions help to minimize the amount of data transfers required to move from the original source data to applying your consolidation rules, such as currency conversion, intercompany eliminations, minority interest calculations, and automatic adjustments, all the way to the final consolidated financial statements and the other associated reports. Historically, when multiple systems were involved, not everything could be fully automated, resulting in manual procedures to move data between the consolidation system to the reporting system. So it's very important to be able to, as you're evaluating different types of technology, envision this end-to-end process where you have data from your source systems that come in through automatic imports with built-in mapping procedures. That's all managed centrally. So you have one set of master data, you have one set of hierarchies for your various chart accounts or structures, organizational structures, that will allow you then to also apply things like the business logics of automated adjustments, eliminations, and then generate your consolidation reports. So always think of this process or this data flow when you're evaluating different types of technologies. Unified systems also permit managers and analysts to include, we talked about the additional notes and commentaries with consolidated data to explain details. Additionally, data from the consolidation system is often required as inputs into budgeting and forecasting systems, again, requiring external movement of data. So the introduction of excessive data movement can introduce risks, as there's the possibility of incorrect data being moved between the different systems. But when this is part of a unified system, all the required data reside in a single source that can be shared between the various applications, whether you're using budgeting or using that data to feed into additional reporting systems or analytical systems. It provides a much stronger foundation, as I said earlier, for master data management, being able to manage that centralized chart of accounts so that all your systems, whether they be budgeting, forecasting, reporting, drive off of that single set of data. And finally, business analytic applications could also leverage the master data. Using a unified approach makes it much easier to incorporate CPM as part of a broader analytics and performance strategy. And now we're up to our second polling question.
Great, thank you very much. So let's go ahead and launch the second polling question, which should be coming to a screen near you any moment now. There we go. How many entities do you have for consolidation at your organization? And if it's more than 20, we'll deliver an Advil to you. We'll leave this up for about 30 seconds, as we did the last one. A quick reminder, if you have any questions at all about CPE credit for this event, and hopefully you pre-registered for CPE, but if you have any questions or you forgot to pre-register, it's okay. Just email Chris Brower, and her email is cbrauer@proformative.com. We'll show her email on the screen later as well. Okay, I'm going to give 5 more seconds here, and then we'll get back to Jeff. All right, that's that. Thank you very much, and I'll close that down. Jeff, I'm going to go to your next slide, which should be drawing right now, and back to you.
Thank you, John. So before I leave, I want to talk about some of the considerations when you're implementing a consolidation systems. As I said earlier, financial consolidation should be viewed as part of a broader corporate performance management or CPM strategy. And this approach leverages the mapping and modeling capabilities of CPM consolidation systems, which provides, as I said earlier, that level of master data management, and it's much more flexible than those found in spreadsheets or GL-based consolidation systems. They can also give your corporate executives visibility into operational data using the CPM system. So some of the things to consider: create a well-defined process with checks and balances. Make sure you have all your documentation in order before you embark on this process. Have controlled submissions of data or direct imports from your subsidiaries, from the source data to subsidiaries to the various levels of consolidations. Create business rules that will automate your bookings for adjustments and currency conversion. Have a centralized management of your currency rates. Directly import data from your regional subsidiaries. Automate the creation of local and group consolidated financial statements. And also, importantly, be able to monitor the global consolidation process. As I said, as a team sport, you need to be able to have that collaborative facility within your consolidation systems to be able to monitor the global consolidation process and to be able to communicate with all the various subsidiaries who may increasingly be working on a global basis. So we often now dealing with subsidiaries, many overseas, working in different time zones. So having that centralized group collaboration system where you can converse about various facets of consolidation is very, very important. Much easier to have a central repository with all that information in place than to call someone up and then write notes and then email it back to them. When you have all that in one place, it's your one-stop shop with all of that information and context. So what are some of the benefits that people have realized after implementing a consolidation system? Well, one thing is a risk management. It mitigates risks and hopefully reduces the errors. It speeds up the process of collecting the data, making the adjustments, and verifying the consolidated information. So it really provides a framework for governing consolidation that's accurate and auditable. And finally, I guess it provides an auditable statement of record so that you can, as I said earlier, if you can drill back from both the global view back into the local view and review all the different adjustments that have taken place to arrive at the consolidated statements, that gives your auditors much more confidence in how you arrived at those consolidated figures. It also permits the finance team to devote more time on analysis rather than managing data quality and consistency issues. It's no fun trying to manage a bunch of spreadsheets and just check for broken links or formulas, or to manage different types of submissions and dig through emails looking for past submissions. Our time should be spent on analyzing the information, trying to understand what trends are happening and understand the causality of why certain things are happening, and not spending time on just data validation. And I think lastly, a very important thing is that it promotes agility. Agility to respond to changes in requirements or regulatory environments. The world changes quite quickly. Businesses often have to be able to adjust and adapt to these changes, and we don't have a crystal ball to predict what may happen, but we know that when something does happen, when there's some type of an event or new rules get imposed upon certain jurisdictions, we need to be able to adapt, and we need to adapt quickly. And we can't spend a lot of time trying to figure out, well, is my data correct? We need to be able to have confidence in that data and be able to have the agility to respond to these changes and requirements in the regulatory environment. Thank you very much. And now I'll turn it back to John.
Yes, thank you very much, Jeff. Really appreciate that. Next up, we have our second speaker today. And it's my pleasure to introduce Ben Wheeler, who is the Assistant Controller at Myriad Genetics. Ben has worked for Myriad in this role since 2011. As Assistant Controller, Ben is responsible for domestic and international financial consolidation, internal and external financial reporting, and corporate tax filings. Prior to joining Myriad, Ben worked in the Assurance Services Division of Ernst & Young for 3 years and for a local financial institution for 4 years. Ben holds a Master of Accountancy degree and is a CPA. Ben, thanks so much for joining us today.
Thanks, John. Happy to be here. Grateful for the opportunity to share Myriad's recent case study associated with implementing a new solution for our consolidation and financial reporting process. Before I jump into the details of the recent case study or our experience and take you through the decision process and then the benefits that we've received as a result of implementing this new solution, I want to give just a little background on Myriad Genetics. As you can see on the slide, Myriad Genetics is a leading molecular diagnostic company. Essentially what that means is we research, identify, and market products that physicians can use to assess a person's risk for developing disease, guide treatment decisions, and assess the risk of disease progression reoccurrence. I'll just give one brief example to help the audience understand what that means and realize that Myriad is an actual business and not a strange scientific explanation. So essentially, one of our products is something called BRCA-analysis, wherein a physician receives a sample from a patient, either a buccal or a blood sample. They send it to our lab. We process that sample and look to see if there's a genetic mutation. If there is one, the patient is likely to the extent of 90% or more to have breast or ovarian cancer. This information is provided to the physician and then to the patient so they can make critical life-saving decisions. And we have a litany of products associated with this, but that's essentially what it means when I say we're a molecular diagnostic testing company. Myriad is a public company. We went public in 1995. We're traded on the NASDAQ. We have over 1,200 employees. Our annual revenues will be well over $550 million this year, coming from 36 countries and all 50 states. Our corporate headquarters and our lab operations for the U.S. are in Salt Lake City. We also have international presence in Italy, Spain, France, Switzerland, Great Britain, and then we have international laboratory operations in Germany. Just to provide a little background on the accounting function and the accounting department at Myriad, the company uses Oracle. We run R12 for our ERP system. Our chart of account includes over 400 accounts. We've got about a dozen entities that roll up in there, and then we also have dozens upon dozens of cost and profit centers. Our corporate performance management system is Profix. That's the solution that we recently have implemented. We did that last fall and have been running that since we went live in October of last year. We use Profix for budgeting, forecasting, consolidation, and financial reporting. And just a high-level background on what our corporate consolidation process is, and then we'll get into the nuts and bolts of how it used to be and how it is now a little more in the future. But U.S. accounting records are maintained by Myriad accounting personnel here in Salt Lake City. That's where I sit. And then our international accounting records are maintained by the local accounting firms in 8 different countries around the world. Consolidation happens here in Salt Lake by U.S. accounting personnel. Our accounting staff is 12 people deep. That does not include accounting personnel at the third-party bookkeepers or accountants that we have for our international entities. And our current financial close timeline is 3 to 5 business days. And that takes us to our next polling question, so I'll turn it over to John.
Great, thank you very much. And we'll go ahead and launch polling question number 3 of 4. I'm launching that right now. We will have one more polling question at the very end. You can see this polling question is, what is your company currently using for budgeting, planning, and reporting? Excel spreadsheets through a number of other choices. So at the end of Ben's presentation, we will get to the Q&A. We'll go through Q&A, and then we will have the 4th and final polling question at the very tail end of today's webinar. I'm going to go ahead and leave this out for another 5 seconds, so please do go ahead and get your vote in, and then we'll get back to Ben. Okay, I'm going to close this one down. Ben, I'm going to move it to your next slide here, and back to you, Sarah.
Thanks, John. So let me share some of the details of our previous consolidation process, the process we went through prior to implementing our new solution. our international controller would provide month-end balances in Excel spreadsheets. He'd send it over to the U.S. accounting personnel, and then the U.S. accounting personnel would manually validate the data. We'd consolidate balances, and we would perform FX conversion all in Excel files. Then these adjusted Excel balances would be manually entered into Oracle. And it's worth noting that the data was simply balance level data. It was not transaction level detail, which presented some challenges in of itself, and I'll speak more to that when I get to the realized benefits of our new solution a little later on. Once the data was put into Oracle, we would take our Oracle data and import it into Hyperion for our financial reporting purposes. Due to the limitations on what we had on the reporting system, we didn't have functional or native currency reporting capabilities. All reports were in US dollars, and all reporting was required to be performed by US personnel, and then reports could be distributed domestically and internationally. The close process had multiple bottlenecks, primarily because although Excel is a great tool, it's not a collaborative tool, and so oftentimes we had multiple people waiting for something to be done and then move along in the process. And also because it was a manual process, errors would occasionally occur, and as a result, you've got to work through remedying the errors. And this process took approximately 5 to 7 business days when we were working through that previous consolidation process. So when we determined that we needed to look for a new solution, there were a couple factors that drove us to this. One was fairly recent international expansion. We opened internationally in 2011 and have grown well since that time. And then we have also developed a more robust budgeting process, and we wanted to try and work in efficiencies in our consolidation, financial reporting, and budgeting and forecast processes. And as a result, we were looking for a new solution. And in looking for that solution, we identified some key criteria. There's some important considerations to us as an accounting function and as a company. First off, like I say, efficiency was really what drove us to look for a new solution. We wanted a solution that could automate much of the consolidation, financial reporting process, and the budgeting and forecasting processes, for that matter, in an effort to be more efficient with our financial reporting requirements. As I mentioned, Myriad's a public company. We're traded on the NASDAQ, so we have SEC and SOX reporting requirements, which will come into play a little later on. We also needed system reliability. We wanted a system that could support multiple users working simultaneously on the same or different tasks in different places around the world. We needed a reliable system that would support multiple users. It would give us reliable data, and it would provide an audit trail for our external auditors and for our SOX compliance. Price is always critical for us. Myriad is a very successful business, but we take our fiduciary responsibility very seriously, and we understand that adding dollars to revenue and saving dollars from expense have the same impact on our bottom line, and as such, price is a significant point for us when we make decisions. And because of this, we were looking to move away from Hyperion. Hyperion, we could have expanded its functionality, but the cost we didn't feel was commensurate with our use of the product. We needed more flexible licensing options than were available to us. Another important consideration to us was initial and ongoing product customization. As I mentioned, the business had grown internationally recently, and in the foreseeable future that will be the same. We also had a fairly decent-sized acquisition in 2011. And it's likely that at some point in the future, that's the case for all businesses, at some point in the future there's probably going to be an acquisition, and so we wanted a solution that we could tailor or have expand with us as the business grew. And then the level of ongoing IT support was also critical to us. We wanted a system that had a structure that could be maintained or managed by the accounting personnel with limited IT support. And as we worked through that process and identified the new solution that the accounting personnel were interested in, the first step in kicking off an implementation was essentially getting executive support for the new solution. And executive support was readily attained due to good perceived value and the product flexibility available with the solution that we wanted to implement. And so once we were able to get going on that, we jumped right into product discovery. Product discovery took us about a week. We worked with the product engineers to identify the needs of the company in effort to articulate what we wanted the solution to be able to do. And just for a matter of perspective, we started product discovery in September. I think it was probably the first or second week of September. Following product discovery, we went into product development where the software was tailored to the needs identified in discovery. It's also important to note that Myriad accounting and IT personnel were involved in the product discovery phase and were resources to product engineers during the product development phase. Following development, we did a lot of user testing. We spent a lot of time doing report building. We have a fairly robust internal financial reporting package that we generate each month, and without an automated process, that is a very onerous task. And so we spent a lot of time trying to automate the reporting functionality of the new solution. And then following the user testing, we went live, and we used a dual consolidation for our consolidation and financial reporting for 3 months, which was very beneficial to us, which I'll share a little later on the details as to why that was such a benefit to us. And it's also important to note that throughout the implementation, we were offered and obtained valuable training and support through the process. A key example of this was, as I mentioned, we have a robust internal financial reporting package. There's a number of reports that had to be created and tailored, and Myriad accounting personnel primarily created these reports themselves with direct assistance from the implementation team. This was beneficial to us for at least 2 reasons. One, implementation costs were reduced because internally we had done a fair amount of the work associated with that, and then also it provided us first-hand training on the functionality of our new solution. And now on to the realized benefits that have come out of the new solution. As I mentioned, we started the implementation process in September. We ran a dual close for October, November, December, and we've run the new solution in isolation for consolidation and financial reporting for January, February, March, and April. And in that time, we've recognized a number of benefits. One of which is we've reduced our close process time by approximately 2 days, and that reduction is directly related to decreased manual processes, which results in decreased errors or fewer errors, and also we've been able to automate portions of the process, which has saved us some time. We now have the ability to accurately report our financial information in numerous currencies. We can do it in the native currency of any of our entities, also in US dollars, and it's at the click of a button that change takes place. I think my favorite realized benefit is that our international controller is now able to create and run reports, reducing the reporting burden on our corporate controller and myself. The new solution provides greater transparency into international activities. As I mentioned previously in the case study, I talked about how our old process entailed only loading balances, not transaction level detail for international entities. In the new solution, we have the capability, the functionality that affords us to load transaction level detail, which provides a significant increase in the transparency and our ability to understand what's going on internationally. The solution provides a more transparent audit trail of consolidation entries and adjustments. We've been able to create workflows that require approvals, and it provides paper trails for our external auditors, and it has allowed us to strengthen our SOX controls framework by identifying system-related controls in our financial statement close process. And we're a June 30 year end, and so we've recently been working through our fiscal 2014 budgeting process, and as we do that, every year we identify new cost centers, new profit centers, new accounts. In fact, we've opened a couple new entities since we've gone live with the product, and the accounting group has easily been able to adjust and maintain the solution to tailor it to the changes in our structure, reporting, and budgeting. So that's been a great benefit to us. And I think what is likely the most important information I could share about this case study or our process in implementing a new solution is essentially the lessons that we learned in going through this. Some things we did very well, some things that we'll definitely look to do better next time we have the opportunity to do a system implementation. The first point here, we found both the hard way and the benefit of this, spending time mapping out project expectations on the front end, as we were able to articulate specific functionality to our product engineers or our implementation engineers. The implementation of the functionality that we were clearly able to articulate was seamless. Whereas areas where we knew we wanted improvement, but we weren't exactly sure how we wanted to make that improvement or to make the process more efficient, that was more challenging to implement. We were able to do it at the end of the day, but it was definitely, it took more time and more iterations of back and forth with product engineers in order to have the solution provide the functionality that we wanted as our understanding of what we wanted evolved. I've mentioned previously we had our IT group included in all aspects of the project. That was tremendous help for a number of reasons. As I get to a challenge that we experienced on a later slide, in a slide or two ahead, I'll talk about one of the direct benefits we received as a result of our IT group being involved with all aspects of the project. It's critical to establish well-defined roles and responsibilities, as this doesn't come as news to anyone. System implementation is, the work doesn't get done by itself, and the people who are responsible within the company to assist with the system implementation, their day job doesn't stop when implementation starts, and so it's important that those involved in the implementation process have a defined role and responsibility, so it's easy to track progress and to determine accountability so you can see that the project moves along. It's important to identify ways to involve or be involved in the system build or process creation. I shared earlier how that benefited us when it came to report building. We were able to learn firsthand how the system's functionality worked with the financial reporting aspect, and also it was a financial benefit to us as far as reduction in implementation costs. Consistent communication by all project participants, that feeds directly into having defined roles and responsibilities, being sure that people are accountable and working towards the end goal, and communicating successes and challenges. We also found it extremely helpful from a training perspective, and then also as we've had the opportunity to expand or further customize or tailor our solution in the months following implementation, that creating and maintaining written documentation of the processes and procedures was a great resource to help in tailoring the system, and also it provided a great learning experience for those that created the documentation. And it's also worth noting that the data preparation and validation was the most time-consuming aspect of the project for our accounting personnel. And it directly relates to the point that Jeff mentioned. You need to manage data quality and consistency. Without data quality and consistency, your financial consolidation and reporting tool is not a great tool for you. So as we spent the time, the tedious, monotonous time making sure that the data was accurate on the front end, we've reaped dividends on the back end, because we don't have to spend time validating that roll-ups are accurate or that data is complete, because we invested the time on the front end, and like I say, we reap the rewards of that each month as we work through our close and financial reporting process. And then just the last few lessons learned as we've gone through this process. It's important to recognize that errors are likely going to occur during implementation. And when that happens, it's important to keep expectations in mind as errors are resolved. My example of this, and this will highlight the importance of IT being involved in the process. For our December close, in preparation for our December close, internal accounting personnel were doing some prep work the final week of December. That can be challenging at our company, primarily because the majority of the company is gone the last week of December. But as we are a public company and we have financial reporting obligations and our external auditors come in on a specific timeline, it's important that we spend time the week prior to the close of the quarter doing some preparation work. And during the month of December, internally we had made an adjustment to one of the processes within our solution, which we hadn't tested out yet. And as we were working to import data from Oracle into our new solution, we were crashing our SQL Server cluster because the IT personnel involved in adjusting the process, essentially they had built a data view that wasn't jiving well with the system. That's the explanation from an accountant, not from an IT person. But anyway, as it was the closing week of the month, and it was important that we were able to get information into our financial reporting tool, and personnel were not available at Myriad. It was important to be running the dual process. It was important that we had a duplicate system, so we didn't lose time. We were able to work using our old system to get through that. And as Myriad personnel became available before the close of the month, the IT personnel were able to reach out to those on the implementation team that they had worked with on the IT side in order to resolve the issue. As I mentioned, it was an issue created internally by us, but because of the relationships that had been created throughout all stages of the project by our IT personnel with the implementation team, they were able to resolve the issue and adjust the process so now it works seamlessly. And that example essentially hits on multiple of my final points here. So as I say, run duplicate systems until the project is complete. That was invaluable for us. That may not necessarily be our situation, may not be the situation for everyone implementing a new system, but I would say it's better safe to be sorry, and it was a benefit for us. Ongoing training resources are also incredibly invaluable. Again, this isn't news to people, but as you learn a new system, you develop a baseline of understanding, and as you have that baseline, you're able to ask more important questions or more detailed questions that will enable you to use a solution's functionality to its fullest, whereas if you don't have ongoing training resources available to you, it's hard to increase that baseline of knowledge. So it's important to have a solution that you can reach out to message boards or receive training directly from the solution provider or from your implementation team so that you can continue to strengthen your baseline of knowledge and ultimately use the solution and its functionality as it has been designed to be used. And the final point I want to make is in financial reporting and consolidations, this is going to be true for budgeting and forecasting, timelines are always present, so efficiency is paramount. And generally the most efficient way to do something is the simplest way to do something. And so it's important to keep your solution simple. And that's lesson learned and benefit realized with our new solution. We've been able to customize it and adjust it to the size of our business. We've been able to expand as our business grows, and we anticipate doing the same in the future. So that's all I have for my prepared remarks. I'll turn the time back to you, John.
Thank you very much. That was wonderful. It's always great to hear from someone who's living this, and you definitely went through it there, but it sounds like it was a great project. One thing we're going to start out with here is actually taking a quick look at the results from our first 3 polling questions, and then we'll ask the speakers to comment on them. So we'll put the first one on the screen right now. So the question here: how much time do you spend on month-end closing activities? You can see a preponderance of folks are either 3 to 5 days or 6 to 10 days. Now we've got some fast closers and some slower folks. Jeff, is this typically what you see when you guys go in and talk to clients?
Yeah, I think it's pretty representative of the market when we speak to customers and partners, and maybe there's some differences whether you're North America or international. I know we don't have that information here, but certainly it's pretty typical of what we see. Yeah.
And Ben, it sounds like you guys started at 5 to 7 days, and you clipped a few days off that process during this implementation. Have you guys settled out at 3 to 5 days at this point?
I think that we have. I can tell you that at the start of the implementation, we were closer to the 5 days, and we're closer to 3 now. I don't see us getting a lot faster than that. I don't think there's a ton of benefit for us internally, but I'll tell you, I love being done with close in 3 days.
I bet. I have no doubt. Okay, let's go ahead. I'm going to hide this this one, and let's go to the second and share this poll result. So the question here was, how many entities do you have for consolidation at your organization? And 3 to 5 is most common, with 20%. And actually, we have a lot of people. We have almost 200 people in this webinar right now. That's about 40 companies that have more than 20 entities. That's pretty impressive. Jeff, do you, when you're looking at mid and large size companies, is this a fairly typical spread?
Yeah, I think for the mid-market companies, 3 to 5 to 10 entities, a typical spread. What'd be interesting to know is maybe for the ones with the more than 20 entities, what systems they're using and what type of a time frame are they looking at. That'd be a good additional question, I guess, to ask.
Yeah, I would certainly hope they're automated and off Excel, because that would be a nightmare. And let's go to the third polling question. This one was, what is your company currently using for budgeting, planning, and reporting? Ben, what were you using before you guys went on to your new system?
We used Excel.
Excel, okay. Did you guys have many issues with, data quality and, bad links and all that fun stuff?
Really, the benefit in reducing our close time has been being able to rely on the data without having to spend so much time validating or going through the manual processes within Excel. So yes, is the short answer.
Okay. And Jeff, I'm going to presume that roughly 60% using Excel. That's got to be extremely common.
Yeah, I think it's common, and I think it's indicative that there's still people who are facing the same issues that Ben faced, and some maybe other people in the Proformative community have faced, of how do you become more agile, how do you become more flexible, and I think what's being asked more of these days is being able to do what ifs and changing a couple of variables and seeing what the results are. Certainly for budgeting and planning and different types of corporate planning, that's very common. But even with financial consolidations, where people are asked, well, what happens if I apply a best case rate, currency rate, to some of my consolidated results? Does that change things? And those are some of the things that are challenging to do in Excel, given the tight deadlines that we're faced.
Right, gotcha. Okay, we have questions coming on in from attendees, and I would encourage people to ask questions, even if we don't get to them in the next few minutes here. We'll work with the presenters to follow up with you. But let's start going through a few of these. First one up for Ben. How many users did you have during user testing during your implementation versus what's the size of your full team? So what did you feel was sort of required to get a good feel for the user testing during implementation?
Sure. So ultimately, we had 2 heavy users and then 2 lighter users doing the user testing, and it was almost a full-time job for a week for the 2 heavy user testers. It bridged multiple weeks because those 2 users had other things to do besides simply user testing, and then I'd say it was probably a third-time job, maybe 20, 15, 13 hours a week maybe for the other 2 users, the lighter users. So.
Mm-hmm. And Ben, I've got to say that's one of the fastest implementations I've ever heard of at a company your size. I mean, how did you pull that off?
Well, as I mentioned, one of my key points and lessons learned, being able to articulate what you wanted done, was important, and we were able to do that with the majority of the aspects or elements of the system. And really, the solution it's a simple, very tailorable solution. And so, although we're a large organization, we really don't have that many complexities, but because we were able to articulate what we wanted and the solution is so tailorable, we were able to quickly work through it.
Okay. Next question, this one's for Jeff. Does Profix's software platform help in the acquisition process, which is always a nightmare when you're starting to consolidate new books from new systems?
Yeah, I think it does. I think it does because, again, you have a platform to centralize that data collection. You have the ability to perform mappings, and something that, as I said earlier, that you can't do is sort of this what if. You know, you want to be able to show what the consolidation results are with the acquisition and maybe without it, so you can have different versions of the data all in one system, and I think it does really help to be able to present maybe to the decision makers or stakeholders and management to different views of the information. So absolutely, I think we certainly have companies who have used Profix to manage the consolidation of multiple companies and different systems. It allows you to often maybe also breathe more life into some of the other systems that you have in place, because you can use Profix as a platform of bringing that data in from the ERP systems, managing the mapping tables, etc., and then still generate your consolidated results, certainly.
Well, that's interesting. That actually leads into our very next question, which is to Ben. Ben, how much of your company's accounting is managed on Oracle versus Profix? Like, are you guys actually doing transactions, period-end journals, et cetera, in Profix, and then they get shot back to Oracle? Can you talk a little bit about that?
Sure, that's a great question. So all of our domestic accounting information is housed in Oracle, which is the vast majority of the entity or the organization's accounting records. The international data is housed solely in Profix, and so I do my month-end consolidation and adjustments for international entities within Profix.
Okay, fantastic. Well, at this point, we have a couple of minutes left. We have one more polling question and a couple pieces of housekeeping. So what I can see here is that we have a handful of questions that we have not gotten to. Our apologies. We had great content today, but we just didn't have enough time, and we want to respect everyone's time. So let's go through these housekeeping issues, and then we'll work with today's panelists to get back to the people who are even right now still sending questions in. So we'll do our best to get those answers back to you directly. Okay, so very quickly, after the final polling question, which we'll launch in just a minute's time, you will be prompted to take a short survey on this webinar. We greatly appreciate your feedback. It helps us do better every time. Also, in that survey, we allow you to do a couple of things quickly with a click of a mouse. You can ask to be connected after the event with either of today's speakers or with Profix, the sponsor. So feel free to do that, and then we'll connect you directly with them. Also, we have an upcoming conference, which we'll talk about in a moment. You can click if you'd like to get more information about that conference. Next up, of course, please join us at Proformative.com, our online community of literally tens and hundreds of thousands of peers. It's a great place to ask questions like you're asking now and have your peers help you answer them. If you have any questions about CPE credit, please contact Chris Brower. You can see her email right there. Next up, CFO Dimensions, just very quickly, this is our annual strategic leadership in finance, accounting, and related functional areas. It's August 21st and 2nd in New York City. We have our early bird pricing out right now. Please check it out at cfodimensions.com. Almost lastly, a hearty thanks to Profix, amazing speakers that they helped procure today. Ben and Jeff, for your parts, thanks for joining us today, and just a great job. A lot of very valuable information. We appreciate all of it, and thanks for joining us, and thanks to Profix for bringing this all together. So thank you.
My pleasure.
Yeah, thanks, John.
You betcha. Pleasure was ours. And finally, with 1 minute left, we are going to go ahead to polling question number 4. Final polling question for those with CPE. I'm going to go ahead and launch that now. We'll keep this out for 30 seconds like we did all the other questions. And you can see what's the current state of your company's financial consolidation and or reporting process. So go ahead and take 30 seconds for this. And while you're doing this, we'd like to thank all the attendees. We recognize how busy you are. We're all practitioners here at Proformative. So we understand that it's not easy to take an hour out of your busy day to come and join us. We greatly appreciate that. We hope to see you again at another Proformative event or online at Proformative.com. What I'm going to do now is give us 5 more seconds to answer this polling question. Then I'll close down the webinar, and you will be presented with that 60-second post-event survey. We greatly appreciate your giving us those 60 seconds so we can do better the next time. And don't forget, if you would like to be connected with today's speakers or get more information about our upcoming conference, you can do that with a click of the mouse. So thanks. Have a great week, everyone. We hope to see you back soon.